Hello, so let's get started with the Monday forecast. First, let's go over the euro and US dollar. What I saw right here is I saw a range. We were breaking the lows retracing, breaking the highs retracing, and we were stuck in this flat range. Then we got a nice big impulse to the upside. So after this impulse, I was looking for a trade, but the market closed down. Then we opened up with a gap, and there was an opportunity to enter on a bomb right here. But I know that on a Monday morning, bombs that form are not high probability, so I stayed out of this trade. And I was not willing to look for any bullets right here. So what I can expect is the price will continue with this range between the low and the high, because I know that euro likes to do this for a long time. So it tends to be stuck between the low and the high. And we need to see what happens when the price breaks the high. So maybe it breaks with momentum. Then I would look for a bomb trade. Maybe it breaks with momentum and then we get an opportunity to enter on a bullet long trade. Or what can happen, we can get a break, pull back another break, look for a bullet long trade. Then this would be very high probability. Or what can happen, we can ascend to the upside, break the high, then shoot to the downside, get an opportunity to enter on a short trade. And similar thing to the downside, we can get this impulse, and then this would signal to me a V reversal. What I would then wait for is a small range and a continuation of the second leg. Then I would look for a trade. So this would be that second leg. We would then get a range and a continuation of that second leg. This is a common pattern that happens, so it can definitely be traded. Also, what can happen, we can get a push, pull back another push, look for a bullet short trade. What can also happen, we can get a descending, breaks the low, push to the upside, look for a long trade. And if we do get a larger range right here, what I need to keep in mind is that there are then liquidity areas. Let me just draw this. So liquidity areas above and below, right here and right here. So it is highly likely that the price will just push into the liquidity area and retrace. And what I need to see is a nice big break and then a nice clean continuation pattern. Which would signal to me that we are out of the range and that we are ready to push either to the upside or to the downside with momentum and get maybe a trend. So yeah, that's it for the euro. I currently classify this pair as trending to the upside, but we are trending, but we are stuck in this between the low and the high, so still waiting to see what happens. So the euro and the Japanese yen, it was a similar story to the euro and US dollar. We were ranging, so we broke the low retrace, broke the high retrace, broke the low retrace, signaling to us a larger range, which we then got. So we were stuck in this flat range. Then we got this small ascending, and then we broke the low with large momentum. So currently I classify this pair as trending to the downside because I'm seeing this big impulse, I'm seeing this nice momentum, and maybe we get a trend out of this. So what can happen, we can get a bomb opportunity right here, or maybe we get more of a push, then look for a bomb. Also, I would look to see if we get a push, pull back another push, look for a bullet short trade. We can start to descend from here, then I would know that the move is over. I would look for a push to the upside, look for a long trade. And what I need to keep in mind is that there are liquidity areas also here, because we are in this larger range and people that are buying are putting their stops above these lows. So what can also happen, we can retrace straight away, get this V reversal, then I would look for a small range, look for an impulse to the upside, so in the direction of the second leg. This is that pattern I was talking about, and if that happens, I'll definitely be looking for a trade because I know it's a high probability setup. Also, what can happen, we can just stay ranging between the low and the high. So something like this. We can also maybe get the bullet opportunity to the upside but it really needs to be clean price action. Otherwise it would just signal to me a V reversal, and I would not want to enter on a short here. And it all depends on how we close here. If it closes solid, then that's a good sign. If we close with a wick, that means we have reached the liquidity area and we will most likely retrace to the upside. So I need to see really clean price action. Also, what can happen, we can get a push to the upside, pull back, another push, look for a bullet long trade. Or we can get this ascending structure that breaks the most recent high, push to the downside, look for a short trade. So yeah, those are some of the possibilities. This impulse is looking good, but as I said, we need to watch out what happens when it breaks out of the liquidity areas and out of the range. If it will just retrace, or it will continue, or will it give us a nice clean entry. So now for the Aussie and the US dollar. So what I'm seeing right here actually is that we had this nice big impulse, then we had a pullback, we broke the low, retraced, and then it was very high probability that we will continue to the upside, or that we will shoot to the upside, because that is a common pattern. We can get a nice big impulse, then a descending at the bottom, then we get a push to the upside, and it starts a trend. So we broke the high with momentum, but then we broke the high again, retraced, so signaling to us that the move to the upside is coming to an end. Broke the low, retraced, broke the high, retraced, and now currently we are in this ascending structure. So I classify this price action as being ascending. So I'm seeing this. And I know that when I see an ascending structure, it is most likely to shoot to the downside. So I'll look for something like this, look for a bomb trade, bomb short trade, or maybe we get nice clean impulse, then look for a bullet short trade. Also, what can happen, we can get a descending from here, then it will just turn out to be a larger range, because I'm seeing an ascending into a descending, which usually signals ranging price action. What can also happen, we can get more of an ascending structure, then that would be very high probability. Then we shoot to downside, look for a bullet short trade. And we can also get, I forgot to say, so push, pull back, another push, look for a bullet short trade, very high probability. So what can also happen, we can shoot to the upside, get a nice big impulse, look for a bomb trade. Or what can happen, we can shoot to the upside, get a pullback, another push, look for also for a bullet long trade. And this would be very high probability, since we are then seeing a trend, we're seeing two clean impulses. So yeah, that's it for the Aussie. Currently I'm seeing an ascending structure. I'm waiting for the price to shoot to a downside and show me a high probability entry. And also what I can keep in mind is that we had this range here. So I know that there are liquidity areas above and below this range. As we can see, we pushed to the lower liquidity area and shot straight to the upside, so got a reversal. But then we shot into the upper liquidity area and got an ascending structure. So this is, to me, likely that we will shoot to a downside, because that is a common pattern also that I know, is that we get the range with the liquidity areas above and below, and then we get an ascending structure into the liquidity area, which means to us that the move is exhausted and that the market makers are taking out people's stops, and that they're ready to push the price to a downside. So we get a nice big impulse to downside, then we get an opportunity to enter on a short. So yeah, that is also one of the patterns which I would really like to see. But again, we need to see evidence in the price action that we are ready to move either to the downside or to the upside. So we need to see a nice, clean, big impulse. So now for the Aussie and the Japanese yen. Currently I classify this as ranging price action. So we got a nice big impulse to downside, we got a pullback, we broke the low, retraced, broke the high, retraced, broke the high, retraced. Then we broke the high with momentum, but what happened at the top of the impulse, we broke the high, retraced, signaling to us the end of the move and that the move is exhausted. So I just want to take this back, because at this point this was a very high probability setup to me. Why? Because I saw an upper liquidity area, so I saw a range, and I know that there are people stops here, so people that are going short, they're going short here, going short here, going short also maybe right here, putting their stops in this area. And what I can see is that we ascended into that area, so the market makers are taking out people's stops, and that it is highly likely that we will shoot to a downside. So what happened then is we got this candle, and this candle did not give me enough evidence to look for a short trade, because I saw this huge wick. It was just one candle, I saw a huge wick, so it doesn't fit my plan. If the wick was smaller, I would definitely be more keen to take it, and I would definitely consider it. If we got a clean close, it would be a no-brainer for me. I would be in it all day. But after this huge wick, I'm waiting for more evidence, so actually we retrace straight away. And this point would be the bullet short entry. So if you were to enter, you would enter right here. Let me just get the template. I don't have a template, but you would enter right here at this point, and then you would currently be in profit. But as I said, it didn't fit my plan because of the one candle break and the huge wick. I was expecting a range. What actually happened is we broke the low now, got this nice candle, so we need to see what happens. Next. Maybe we will continue with this momentum and get a nice bump opportunity, or maybe we push to the downside, get a nice bullet opportunity, or maybe we push, get a pullback, another push, look for a bullet short trade. We can just retrace back into the range and start ranging again, so something like this. Or we can get a descending from here, push to the upside, look for a long trade. Or we can get an ascending structure, look for an impulse to the downside and a short trade. What can also happen, we can shoot to the upside, then I would look for a bump. Or we can shoot to the upside, get a pullback, another push, pullback, look for a bullet long trade. So it all depends on what happens next. But currently I am expecting the price to push to a downside. As I said, we were in this range. We reached the upper liquidity area with an ascending structure, which is signaling to me that the market makers are ready to push the price to the downside. They have taken enough stops, and I'm waiting to see a trend to the downside. And I would be very, very happy to enter on a short trade. If this candle has a clean close, I would definitely consider taking a bullet short trade, but it all depends on what happens. So we will see, and we will see where the momentum is. So yeah, that's it for the forecast. Currently we are seeing some moves, and but I'm also keeping in mind Monday and Tuesdays are predominantly range bound. So let's see what the rest of the week brings us.